In a surprising turn of events, a land plot in One North recently received 0 bids, a rare but telling sign of caution among developers. At the same time, new launches like One Marina Gardens and Bloomsbury Residences saw take-up rates of only 25 to 38%, a stark contrast to earlier launches like Parktown Residence, which sold 87% of units on launch day. So what's really happening? Is this the start of a market correction or something more structural? Is the market crashing? Will new launch prices drop significantly? Are we about to see developers fire selling unsold stock? And what about the resale market? Will prices finally soften? Before we jump to conclusions, let's first understand the impact of tariffs and how they could affect both new launches and resale properties in Singapore. Before we dive deeper, like, share and subscribe. It helps us reach more homeowners, buyers and investors like you who want clear, no-nonsense insights into the property market. So what tariffs mean for property in Singapore? In early 2025, the US announced a fresh wave of tariffs on imported goods. While these aren't aimed directly to Singapore, the ripple effects are global and very real. Here's how tariffs affect the Singapore property market, both new launches and resale. Here are a few potential concerns for Singapore's property market. Increased construction costs. Tariffs push up prices for materials like steel, cement and aluminium, raising development costs which can limit developers' flexibility in pricing for new launches. Buyer and investor sentiment. With the global economy on shaky ground, buyers and investors are becoming more cautious, leading to softer demand across both new launches and resale properties, particularly those with higher price tags or less compelling value. Supply chain disruptions. Tariffs can slow down project timelines and raise holding costs, leading to strategic delays in launches and more cautious pricing in both primary and secondary markets. Singapore has seen its fair share of external shocks. Let's take a quick look at how global events have historically impacted our property prices. 1997 to 98, Asian financial crisis. 2003, SARS. 2008 to 2009, global financial crisis. 2013, cooling measures. 2020, COVID-19. 2022 to 2023, Russia-Ukraine conflict, global inflation. 2024 to 2025, tariffs and interest rate volatility. With all these headwinds, why hasn't Singapore's property market collapsed? It's because of decades of prudent policies that act like shock absorbers. Here are some cooling measures the government implemented as a stabilizing force. Additional buyer stamp duty. This limits foreign and speculative demand. Total debt servicing ratio ensures buyers don't overborrow. Loan to value capping reduces leverage on new and resale purchases. Government land sales control. The supply is released progressively to avoid market flooding. These measures keep demand genuine and borrowing under control, creating price resilience in both new launch and resale markets. So here's an outlook for new launch and resale prices in 2025. So what can we expect in the months ahead? For the new launch market, in short term, developers are pacing launches carefully and offering more buyers incentives to match market sentiment. For mid-term, prices are likely to remain firm due to high land and construction costs. For the resale market, in short term, some sellers may soften prices, especially for older or less well-located units. For the mid-term, demand stays firm for well-located, renovated and MRT-accessible homes. So here are some tips to navigate tariff uncertainty. For buyers and investors, be price sensitive, not price blind. Look for value buys in both the resale and new launch segments. Don't assume all prices will crash. Evaluate holding power. Make sure you can ride out 3 to 5 years of market cycles if needed. Look at rental demand in uncertain times. High rental yield areas become safer investments. Track developer and seller behavior. Incentives, delays or price adjustments could offer opportunities. For sellers, know your positioning. If you are selling resale, stand out through renovation, location or competitive pricing. Be flexible, not desperate. Understand buyer hesitancy and be ready to adjust slightly, not slash irrationally. Watch the numbers, not the noise. Consult agents on actual demand trends, not just headlines. Tariffs may be causing tremors globally, but Singapore's property market stands on solid ground. Whether you're buying, selling or investing, knowledge, timing and strategy will always outperform speculation. If you found this helpful, do like, share and subscribe for more grounded, data-driven property insights. And drop a comment if you'd like a deep dive on resale strategies or new launch picks to watch in 2025. Thank you!